Comprehensive analysis of the S&P 500 Index, SPX, for long-term investors. Recap of last week's performance. In our previous analysis, we noted a continued upward trend in the stock market, with the S&P 500 Index, SPX, registering a plus 1.58% increase. This week's performance. This week, the S&P 500 Index, SPX, experienced a modest rise of plus 0.61%. The NYSE Advance-Decline line also showed a slight improvement, increasing by just plus 0.21%. Conservative S&P 500 strategy. The conservative S&P 500 strategy aims to shield investors from bear markets and during short-term declines without triggering sell signals. This approach relies on long-term chart analysis and remains unaffected by emotional reactions or news events. It is designed to accommodate market fluctuations without attempting to time every minor up or down movement, maintaining a long-term perspective. Our current stance is bullish in the RIDEX S&P 500 Index, SPX, for long-term investors 500 Nova Fund, RYNVX, or similar S&P 500 index funds or ETFs like SPY. S&P 500 Index, SPX, and current market analysis. Last week's insights. We previously discussed the upward movement of the S&P 500 Index, SPX, and NASDAQ 100 Index, NDX, despite a declining breadth in their advanced decline lines. This week's insights. The issue of inadequate breadth persists for both the S&P 500 Index, SPX, and NASDAQ 100 Index, NDX, as their advanced decline lines fail to rally as expected in a bull market. However, both indexes closed the week at new weekly highs, with the SPX adding plus 0.61% and the NDX gaining plus 0.21%. Economic indicators and market sentiment. Inflation expectations. Year-ahead inflation expectations remain steady at 3.3%, still above the pre-pandemic range of 2.3 to 3.0%. Long-run expectations rose slightly from 3.0% to 3.1%, indicating persistent inflation concerns. Consumer debt and retail sales. U.S. consumers are increasingly relying on debt to sustain consumption, with credit card debt reaching record levels. Retail sales barely increased by 0.1% in May, suggesting the ongoing impact of high inflation and interest rates. Sales in April were revised to show a decline, further highlighting economic fragility. Housing market and Federal Reserve outlook. New home construction fell by 5.5% in May to a four-year low, signaling potential challenges ahead for the housing market. This decline, coupled with softer demand and easing inflation, may prompt the Federal Reserve to consider cutting interest rates later this year. Recent economic reports. Conclusion. Our strategy remains bullish for the S&P 500 Index, SPX. Aggressive investors should consider positions in the RIDEX Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs such as SPY. By maintaining a long-term perspective and relying on comprehensive chart analysis, we aim to navigate market fluctuations and capitalize on bullish trends while mitigating risks associated with bear markets.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.